The week investors have been waiting for since the August market sell-off. Yes, Nvidia will report earnings on Wednesday after the market closes. The company is expected to address the Blackwell delay issue on the call. Joining us now to talk about Nvidia and how that can impact big tech and overall market sentiment is Gene Munster, Deepwater Asset Management managing partner. Gene, thank you for being here. Important big week. You think the odds are skewed that Nvidia actually trades down on earnings. Why is that?
Well, you hit the pressure point right out of the gate there, and that is, of course, related to this Blackwell delay. Last quarter, Jensen Huang said that they're going to have a lot of Blackwell demand, a lot of Blackwell revenue, specifically in calendar 24, and I suspect that that's going to be modest revenue. We're talking about a 3-month delay, and ultimately, I think that for investors who are just hyper-focused on every minute of what this company is doing, that could be viewed as a slight negative. Also, keep in mind the stock is up 30% over the last 3 weeks, just shy of 5% of its all-time highs. And so there's just a ton of noise around the quarter, but I think this Blackwell piece is probably the most important X factor about the quarter. And so that's kind of why I think that the stock is going to trade down modestly. But I don't think that stock action should be representative of the opportunity Nvidia over the next couple of years.
So, I mean, this is a company that does have a history of over-delivering, regardless of the promises it makes. Do you think this time will be different? And if so, if it does trade down, do you think the knock-on effect for other big tech names could be even more sizable in magnitude?
I think that's the risk this week, of course, and just to zero in on the next 5 days is that the market is going to be, this is the only thing that matters to the AI trade this week. It's obviously the biggest factor in general, but of course with the earnings. And so, yes, I think that if there is a modest pullback, I think if there's anything around Blackwell, I think that could be perceived as a negative for kind of broader tech, that especially the mega caps that have enjoyed some of this AI movement here. I still think we're very early in this. But again, I want to frame in that I think that trading in the near term doesn't impact what's ultimately going to happen. And I think that investors are going to get hyper-focused this week, but it's ultimately going to probably miss what I still believe is the biggest opportunity we've seen in 20 years. I still think that we are in the early innings of a 3 to 5 year tech bull market that's powered by AI. And I think that many of these big tech companies are going to do well over the next couple of years as that starts to go. So yes, I think this is going to be probably a more difficult week for broader big tech, but I think that ultimately shares are going to recover quickly as investors come to grips with, I think, is a stronger AI trade than what many believe is today.
Gene, one of the stories that seems in play in terms of why there was such great outperformance among the NASDAQ 100 type stocks going into mid-year was this scarcity of earnings growth, and they obviously had these reliable growth paths ahead of them, and now it's broadened out. The rest of the market is actually clicking back toward positive earnings growth. You saw the equal-weighted S&P now outperforming the NASDAQ 100, and it seems as if it's through no fault of their own. Maybe they're just not the preferred trade anymore. Is that something that you think it can persist, or do you essentially still see kind of a tech bubble brewing up ahead?
I think we're still very early, and just to kind of put into context, we talked a lot about the quarter, about the stock action around Nvidia, and this gets to kind of the broader theme. I think that the most important part about the Nvidia quarter, I just want to go back to that 1 minute because I think it's important relative to the overall conversation, is Jensen's comments about what's going to happen with demand over the next 1-2 years. 2 quarters ago, he said they have more demand than they can supply through the end of this year. Last quarter, he said well into 2025. If he continues to reiterate that the demand has continued to be more favorable, which I believe that he will do that, if he continues to reiterate that they have more demand than supply, I think that investors, awareness of the substance of what's going to happen is going to continue to be illuminated. And ultimately, I think that these companies are going to continue to do very well. Take Apple, for example. I think that ultimately they can earn $8, $9 kind of in the next by 2026. And I think that that's well higher than what many think. So, Mike, I believe that that this is just a fundamental, there's a lot of awareness around AI, but I think that the significance of what it's going to do is still underappreciated by the market.
Gene, we had Bradley Tusk of Tusk Ventures on Fast Money last week, and he talked about the venture market for AI and how startups with that AI bend aren't getting the pie-in-the-sky valuations that they had been getting. There's been a demonstrable slowdown and a reset of valuations. And I'm just curious how that translates to the public markets, do you think, in terms of incremental dollars still seeking AI plays and just the overall story nature of AI at this point in the cycle?
So on the public side, we're still in this hardware phase. The software phase largely still hasn't taken root. That is largely going on in the private markets. I think some of these foundational, these ordained private companies, at Deepwater, we also invest in private companies. We have a venture arm. And so we're seeing what you're talking about, but we think some of the best opportunities in software are on the private side. We'll see those companies go public in 1 or 2 years. But to answer your question is that I think that the focus of investors related to AI and the public markets should be around the duration of what this hardware trade is going to look like. And if you look at Nvidia's growth rates, it's 100% in 24, it goes to 40%, down to 15% in calendar 26. So essentially hitting the wall. I think that they're going to exceed that, and I think you're going to see across the board. We also own like Micron, for example. So I think that this hardware trade, even though there is a deceleration factor to it, I believe that the street will exceed those estimates. And I'm looking forward separately to this crop in a couple of years of these new private companies that are going to, I think, get really that public investors will be really excited about.